welcome everyone. This is the Successful Stylist Academy podcast, where we are on a mission to empower salons and hairstylists to dream big, set goals, and take action. We are here to help you each step of the way at successfulstylistacademy.com. Welcome everyone to Successful Stylist Academy podcast. I am Drea Letcher, and I am the artistic director for Successful Stylist Academy and one of your three hosts. Thank you guys so much for tuning in. Whatever you do not touch that dial. Creative professionals, hairstylists, if you're someone who struggles with a little bit of ADD or a little bit of that hairdresser ADD, hang tight. Do not let your eyes glaze over. Instead, go grab a pen and paper if you're old school, or your favorite note-taking device, because today you are joining us for episode number 7, Financial Success for Hairdressers, with my good friend and specialist in the field, Jennifer Guerrini. Hi, Jen.
Awesome. Well, thank you for that introduction. That was very great to hear all those wonderful things about myself.
Absolutely. So just to give you a little background, Jennifer is a certified public accountant and certified fraud examiner. She has over 18 years in the business in finance, accounting, and audit. And just to let you guys in on this, she actually started with us in the beauty industry as a business manager at my salon and day spa. She was invaluable then. She is invaluable now. She takes care of my taxes for me. She helps me with all financial advising from the big to the small. And make no mistake about it, I make it very challenging.
And you certainly don't make it hard to work with, so I really appreciate you. I've actually always loved numbers. I actually remember when I was little and all my Barbies wore their business suits, right? So they all went off to the office every day with their little briefcase. And I always had a weird fascination with what everything cost. So I can remember that's really one of my earliest memories is how much does everything cost, which I don't know if that is normal, but it certainly was unusual for my parents that didn't love that part of it.
So if I didn't steal all your thunder, Jen, I would really love for you to tell us just a little more about yourself. How are you drawn to numbers and the field of finance? Any experience that you want to share with us?
And I actually started my career a little bit later in life. I was a single mother for many years and didn't go back to school until my early 30s. So I know what it's like to struggle with debt, with finances, with having concerns about your financial plan. So that's something that has always been waiting for me. And as I started my career and went back to school, I was lucky enough to land in the salon with you, which was a great experience. I actually started as a bookkeeper there and then moved my way up to business manager. It certainly is one of the funnest environments that I've ever worked in, being in a salon and day spa. So I loved that about it. Currently, I work as an accounting manager in a large manufacturing organization. Certainly not as fun as the salon and day spa, but certainly one of the highlights of my career right now.
Awesome. Thank you so much for sharing all of that with us. And it's just nice, a little background and personal story just for people to relate. Because I mean, sometimes you kind of look at things and you're like, what do I do from here? How do I, get out of this? And your story starts there. And that is really, really cool. We do keep it lively in the salon. So it is definitely a fun atmosphere. If I would have known you when we were younger, your business suit Barbies could have come over and gotten haircuts with my Barbies.
I have to say exactly.
So I want to dive right into it with you. And just as creatives, we can, as a general statement, I will say we can, struggle a little bit in the areas of our business or our financial business. Maybe that's financial organization. Um, what are some key points or just direction that you could give us as creative professionals to set ourselves up for some future financial success within the realm of like our industry. I know it can be carried in other industries as well.
Yeah, well, I think that personal finance is just that, it's personal. So really it's going to be a different situation for everyone. But there are certainly some kind of ground rules or some guidelines that you can get started on that will really define your financial game plan. And so really that's the goal, is to set some groundwork and move forward, whether you're just starting your career in the beauty industry or whether you've been at it a while. There's certainly some tips that you can take away. Um, and these are pretty established throughout the industry as some really great basic guidelines. First off, I think that I would really recommend that the first thing you do is define your goals. And when I say goals, it's really your financial goals and where you see yourself. That could be whether it's short term, 1 year time period, midterm up to 5 years, and then long term up to 10 years and after that. So make sure that you're looking at your goals, create SMART goals, that they're realistic, that they're measurable, that they're attainable. This will help define what you're working towards as you set your financial plan in place. And I think that really, once you've defined your goals, kind of the number one step is planning on and setting up an emergency fund. So I think that that is an area that should be prioritized as number one. That is a plan for you. A lot of times an emergency fund for a starter emergency fund is going to be 3 months worth of expenses. So if you don't have your money in the bank, if you don't have your money in the bank right now, really, and when I say expenses, I mean the bare minimum, right? This isn't the expenses, the dress you've been eyeing or the lunch that you may take or anything that's kind of extra, but this is really what would it take if there was an emergency that you could survive for 3 months. And that's really going to be the number one. So take your expenses, the bare minimum, multiply that by 3, and that's really your first goal in your financial plan, is to set up that emergency fund. Once you have that kind of as your basis, your groundwork, you're going to work on debt next. So if you have debt, the plan is to start paying that off once you set up your emergency fund. And so that's really for you to plan for the future, because it's hard to plan for the future if you have like these things from your past that's just looming over you. The guidance is really to start with your higher interest debt. So that's normally going to be anything more than 7%. That's really a basic rule because the stock market return is going to be anywhere from 7 to 8% on average. So if you're paying more in interest than you could earn as a return, you need to get rid of that so you can move forward on investing. So that's kind of the third step. So you have goals, emergency fund, and then pay off your higher interest debt. And just kind of a little tip as far as paying off debt, there's different ways you can go about it. You may have heard terms such as the avalanche method or the snowball method. Those are pretty common. Avalanche is where you actually pay off your higher interest debt first. So you get all your bills and you organize them with higher interest at the top and lower interest down to the lower interest. And then you always pay your minimum on everything, but anything extra you have is going to go toward that higher debt. So the higher interest debt. Once you pay off that highest interest debt, you're going to move that dollar that you've been paying toward the higher interest debt down to your next higher interest debt, and so on and so on.
I just always think that means I have more money now at the end of the month. That bill was $300 and now it's paid off, so I have $300 extra a month. This
No, that is no.
is where we go. This is where we go wrong. Okay, continue.
Right. And so then the other method is this. The other method is the snowball method, and same thing here. It's not extra money when you're done paid it. So this is where you get the higher dollar balance first, and you pay that first. So, I mean, there's pros and cons with either way. The pro on the avalanche is you're going to pay less interest. The pro on the snowball is you're going to see more short term satisfaction. You've achieved a goal. So, kind of depends what works for you and what's a good motivator for you. Yeah, and from there, I'd really go from investing for retirement, paying down your lower interest debt would be your next step, and then after that, save for your bigger milestones. So set up those, look at those goals that you set for yourself in the beginning, and go back to, hey, what's my 1 year, 5 year, 10 year? Is it opening a salon? Is it buying a house? Start saving for those goals that you have in place.
Awesome. Thank you. So I took so many notes, so much good information. I know we are going to track back in a couple questions too to dive into just a little bit more of those last like three or four, which was like the retirement or the investing. But before we do that, many of us kind of get really excited and we just go all in, and then we end up unfortunately beginning to work backwards. So it'd be great starting to open a salon or coming into the industry as a hairstylist and immediately defining not just our exciting fun creative goals but those financial goals, and then working through the steps that you told us would be ideal. I did not do that. um, but those of us who kind of have already jumped in and have already been kind of working backwards, are there some resources? And actually, I kind of want to do this both ways. Like, if you are just coming into the industry, and maybe business and finance isn't your strong points, are there some resources that you're aware of that we may not be aware of that we could tap into? And are there some resources we could use? That are maybe a public service or whatever that looks like to help get us back on track.
Yeah, well, I think really the defining number for all of us is our credit score, right? So whether you're actually just starting out, just out of beauty school, or you've been in the industry for a long time, um, you know, going back to the goals, I hate to hammer it into the conversation, but your goals are going to need to be met with financial information, right? So your credit score is really kind of your personal GPA, right? It tells how, as a person, how financially responsible you've been or how financially responsible you can be. So that would be one area that I would recommend that everyone kind of does a deep dive in, and that's their credit score currently and their credit history, and making sure that that's accurate. Because when you think about going to rent a new space, right, you're going to rent a building, they're going to check your credit score. You're going to want to start initiate a lease or work on getting more property or starting your salon, then they're going to look at your credit score. So that's going to be a big, even just your personal life, your house, your apartment, those are all going to be related to your credit score. So you actually do get free credit scores from the three main credit bureaus, but you get those once a year. So I really recommend working with a provider. Credit Karma, you may recognize that as a common provider in the field. You can get your credit score for free, and then you're going into your career with your eyes open. And then if you have something that you want to do, an achievement that you have in mind, you're going to need your finances in order to get there. So you'll have your background in place, and you'll be able to already go into situations with your eyes wide open. There's also great podcasts. There are great Instagram accounts. A couple that I follow are Money Rehab with Nicole Lapin. So she's great. She's does a lot of short podcasts that really great information. And then Financial Feminist by Her First 100K. Another one I follow that has great advice as far as personal investing and personal finances. But there are so many out there. It's hard to name.
Awesome. Okay, perfect. Back to a little bit of that you mentioned within the first original kind of steps that you shared with us. You talked a little bit about retirement, and within the beauty industry, I feel like many of us, I think there's more of us working as independent contractors, less of us working as employees, and that sometimes means the absence of healthcare, vacation time, sick leave, maternity leave, and especially retirement. I mean, these are all like very real, very common things in our industry that sometimes have a little weight to them, to where they can be discouraging if you don't have a plan or you don't feel like you have a means of obtaining them. And whichever ones you feel like you have some information to touch on, what do you feel maybe some of the best resources or options are that we can really ensure that we move into our next season of life with confidence and um possibly not have to work behind the chair until we're dead?
I prefer my hairstylist alive. Thank you very much.
Not on my goal list.
The issues that you pointed out are really why I started with the emergency fund as kind of the number one financial plan, right? So once you've developed your emergency fund, you're going to have a little more comfort that you can handle anything that life throws at you, whether you have illness or whether you got COVID, pandemic, anything like that. So that's really driving the number one, so you can get comfort there. Um, Once you've developed your 3-month emergency plan, you can always extend that to 8 months or 12 months, right? As you get more comfortable with your finances and can move forward. But everybody can also save for retirement, and that's everybody can and everybody should save for retirement. And I think that there's been surveys. Half of America has not met their retirement goal yet. They're behind in saving for retirement, and 20% hasn't started saving at all. A lot of times, and I know hairdressers are primarily there. There is a large female population, and unfortunately, as females, we didn't get a lot of the same education as maybe you may have as a male. And then you have a fear of investing, right? It's what is it, analysis paralysis, where you're not moving forward because you're just afraid to make a decision. But there are things out there that make it fairly easy for you. You mentioned as independent contractors, you may not have the option of a 401k, but if maybe you have a spouse that has a 401k, you can always make sure that they are investing in that. The nice thing about a 401k, and if you don't know, a 401k is an employer sponsored retirement plan, so it's through an employer. A lot of times they're going to match whatever you contribute up to a specific percent. So if you know someone or you have the availability of a 401k, definitely invest up to that percent that they'll match you, because hey, that's free money, and free money doesn't come too often. But unfortunately, self-contractors, a little bit more difficult, but there are options out there as well. There's actually some 4 main retirement plans as an independent contractor that you can look into and invest in. I think the main one that people mostly hear about is going to be an IRA, and so that's one of the most common investment plans. There's also a solo 401k, SEP IRA, and a simple IRA. And all have different limits, contributions, and regulations. But I'll tell you a little bit about the IRA because I think it's such a great plan. And honestly, it's one of the easiest plans that you start with. So it's great for beginners or somebody who hasn't invested previously. With the IRA, it's probably going to be the easiest for you to get into. There's no filing requirements. You don't have to, you can use it whether or not you have an employee. So that's one of the benefits. It does have smaller contribution limits, so you can contribute up to $6,000 per year, unless you're over 50, and you get to contribute up to $7,000 per year. So you get a little bit of a catch-up bonus there. Yeah. And really the main thing that you would need to decide before you start investing is whether you're going to do traditional IRA, and you might also have heard this term before, but a Roth IRA. And so the main difference between that is traditional, you can deduct any contributions on your income tax. So that's done pre-tax. So if I invest $1,000, I'm going to take $1,000 deduction on my tax return as long as it has the income requirements, right? The other side is the Roth IRA, and that's done after taxes. So this is a great way to save for the long term. So let's say I have $6,000 and I put that all in my Roth IRA, reach the limit, and I'm in a 25% tax bracket. I'm going to pay $1,500 this year. But let's say my 6,000 grew to $80,000 in 30, 40 years. I've already, yeah, sounds great, right? I'm not paying 25% on the $80,000 because I've already paid my initial tax. So any of your earnings and any of your contributions at that point all become tax free. So it's a little bit easier to manage when you look at it from the future standpoint. You know what your dollar amount's going to be. You're not going to pay tax. And if you have that same contribution as a traditional and you have $80,000 worth of earnings and contributions, you'd have to pay what $20,000 when you take that out. So it can be a huge savings for you in the future.
Well, and those that information, like that is something easy for me to like start to tune out of. So if anyone else is there, if anyone else is there with me, like I just want to give you like the okay that is where my eyes start to glaze over, but that's where you do kind of like reach out for help, or you have a financial advisor in a bank, or if you have a CPA, you can reach out for help with that, or you can also like just kind of slide this right over as you're listening and re-listen to it again, because I know for me absorbing that kind of information is a little bit challenging, but it's also so crucial, to have that balance of to give me financial freedom. And that's something that I've definitely been, personally working towards, and working towards with you, as you know, Jen, with my goals. But so just to kind of give permission, if you started to zone out there, it's okay. You're not the only one, but just rewind and remind yourself nothing changes if nothing changes. And this is just really great stuff for financial freedom.
And it's important to remember that there's tons of resources online as well, right? So there's the kind of the major players when you talk about investing is, there's the Vanguard, there's Fidelity, there's TD Ameritrade, there's JP Morgan, and they all are online resources that you can go to and educate yourself as well. But my main advice is start now, start early or start now, right? So the sooner you get your contributions going and you start saving for your retirement, that money, it's going to continue to grow at a faster rate. So definitely start early, start now.
Nice. I love that. I'm making little quotes in here. I love it. And just to tag on to what you said, I mean, I do have an IRA, and that is what I pay into monthly. And sometimes it's less than I want it to be, and sometimes it's not as consistent as I would like it to be either. I don't have money coming out of a check, but you can have money coming directly out of your checking account. And one thing I talked to Jen, and I also talk to my friend Jeff Sutton, who is a financial advisor. And one thing I that was like a takeaway for me, and you could go in to your bank and speak to a financial advisor and kind of have them crunch these numbers for you. Because for me, just to hear like you should start an IRA, there's all these things to it, some of it's in moderate, some of it's in aggressive, like that was a lot for me. But to know that that's all managed, and it was put to me like, you're this age, how much is one color a week for you? And if it's like $220 for is what you get paid for one color, let's just say. You're this age, if you put $220 away per week or per month, so just one color, client, and you put that away, what it will look like when you retire. And that was very, very encouraging for me. So that would be something cool. You could ask someone to crunch those numbers, and it seems a little more relevant and a little less overwhelming sometimes when it's put in our hairdresser verbiage too.
No, no, you're perfectly fine. I just wanted to make sure that the whole point is what you were talking about as far as one hair color, one haircut. Doesn't matter that it's smaller. It's what you can afford, and it's definitely going to help you as it starts to grow and compound interest. So start early, start now.
Yeah, and your little quote of that, I mean, it just kind of reminded me of that. And finding a financial advisor who's okay with you walking in with $500 maybe and starting your IRA and then paying $50 a month. I mean, there's a really good chance that you could do a lot more than that, but just knowing like don't feel like you have to go in with a certain amount and you have to pay a certain amount and just follow your quote, Jennifer, start early, start now. I love that. So this is something that I feel like is scary for many hairstylists, many creative professionals. I know it is for me. It can feel a little overwhelming, and you want to be a creative and you want to brush some of these things under the rug, which does no good in the long run. It's always still like a clump of dirt under there. So kind of in closing, what are maybe just some additional words of encouragement you can leave us with as we hopefully are beginning to work towards some more efficient financial practices within our creative craft, and just like in our business for maybe some long-term future, financial freedom. If there's anything you can close us out with a little bit.
It's not too late and you're not alone, right? So there is a whole population of people who haven't invested, who are underinvested, and who are scared to get started, honestly. But as you mentioned, the dirt is still going to be under the rug, no matter whether you brush it under there or not. So the whole advice that I would give is really work on your financial plan. You can make progress. Don't be afraid to ask questions. Don't be afraid to do your research online. There are resources out there, but you do need to start. So that would be the number one thing I would say.
Thank you so much for that. And I mean, that goes along with just, knowing a little bit of your personal story that you shared at the beginning of the episode with us. There's a lot of credibility when you know a person is sharing something with you and they've already really lived it out themselves. And it's been amazing for me to just be a part of watching you walk through your personal, professional, financial success journey. It's definitely been an honor. And thank you for believing in me.
Yeah, I mean, it hasn't been easy. I mean, I had large amounts of debt. It took me over 10 years to pay off my, student loans, which took quite a while. And it's certainly something that I struggled with, and it was difficult, but I realized how important it is for the future. And definitely just having a plan in place, it really gives you some comfort, right? So you can feel more comfortable with what you're doing and focus on your career, focus on, where you are as a hairstylist and how you want to move forward because you're not worried about your day-to-day expenses.
Yes. And just as kind of a daily affirmation, part of this process for me was really finding ways to rewrite my narrative and change what my belief system was based upon my relationship to money and growing up um, pretty poor. And I tell myself, and something I wanted to share with our listeners is my history is not my destiny. And that includes a lot of pieces. And I've been saying that as I rewrite my narrative about what my future finances are going to look like and what the possibilities are. Um, yeah, so thank you so much, Jen, for your expertise and for coming on here and just taking the time to share some of your knowledge with us. I would like to encourage all of you to continue to dream big, set goals, and take action. With that, please join us next week. Myself and Ambrosia Carey, the founder of Successful Stylist Academy, we are going to be talking about conversations in vulnerability for episode number 8. Thank you guys. Bye.